Hello everyone, welcome back to Study Studio. Today we are discussing an important current affairs topic. The 2025 economy just served up a wild ride. We're talking intense pressure from new global tariffs and, at the same time, massive internal shifts thanks to a wave of structural reforms. These aren't just headlines, they're guaranteed to be major point scorers in your UPSC, SSC, and banking exams this year. Struggling to connect all the dots? In the next 15 minutes, we are going to break down exactly what you need to know and, more importantly, how to frame it in your answers to turn this confusion into your highest score yet. The Why It Matters Bridge. For any serious aspirant, understanding the economy isn't optional. But this year is different. We're at a crossroads. The changes we've seen in 2025 aren't just small tweaks, they're a fundamental rewiring of India's economic machinery. On one hand, global trade friction has seriously tested our export resilience. On the other, the government has unleashed some of the most significant domestic reforms we've seen since 1991. Your examiner knows this. They aren't going to ask for simple definitions anymore. They'll test if you can connect these dots. Can you explain how a new free trade agreement is a strategic response to rising global protectionism? Can you articulate the impact of the new labor codes on the informal sector? Your ability to answer these analytical questions is what will separate the toppers from the rest. So, let's jump right in. We'll break this down into three core areas you absolutely must master. First, India's strategy against global trade pressures. Second, the game-changing domestic structural reforms. And third, the critical shifts in our monetary and fiscal policy. 1. The global chessboard, tariffs and trade deals. The first major theme of 2025 has been navigating a tricky global trade environment. The biggest headline here was the intense pressure from the United States, which brought the concept of protectionism back to the forefront. Citing various trade and geopolitical reasons, the US imposed heavy tariffs on Indian goods, creating significant headwinds for our exporters. But the real story, and this is where the exam-worthy analysis comes in, is not just the problem, but India's strategic response. Instead of just taking the hit, India went on a diplomatic and economic offensive, fast-tracking and signing several crucial free trade agreements, or FTAs. This is where you can score big. Remember these key agreements from 2025. First, the landmark India-UK Comprehensive Economic and Trade Agreement, CETA, which was concluded in July 2025, is set to provide near duty-free access for a huge majority of Indian goods. Second, the India-EFTA agreement with the European Free Trade Association countries, Switzerland, Norway, Iceland, and Liechtenstein, became operational in October 2025. This is a huge deal, not just for trade, but because it comes with a massive investment commitment of $100 billion into India over 15 years. Third, towards the end of the year, India successfully concluded an FTA with New Zealand and signed a Comprehensive Economic Partnership Agreement, SEPA, with Oman in December 2025. For your exam, the analysis is simple but powerful. These FTAs are a direct strategic pivot to diversify India's export markets and reduce dependence on any single country, creating a buffer against unilateral actions. It's a classic case of turning a challenge into an opportunity. 2. The domestic engine, a wave of structural reforms. Now that we've covered the external front, let's turn inwards to the most significant domestic change of 2025, the new labor codes. This is arguably the biggest structural reform in the Indian economy in decades, and you are guaranteed to see questions on it. On November 21, 2025, the government announced the implementation of the 4 labor codes, which consolidate 29 old, complex labor laws into a simplified framework. It's important to remember this is a phased implementation, but the core principles are active and are what you need to focus on. So, what are these 4 codes? They are the Code on Wages, the Industrial Relations Code, the Social Security Code, and the Occupational Safety, Health and Working Conditions Code. Instead of memorizing all 29 old laws, you need to understand the impact of these 4 codes. Let's break down the 3 biggest changes you must know. First, the push towards formalization. A game-changing provision is the requirement for mandatory appointment letters for all workers, providing a legal foundation for employment that was missing for millions in the unorganized sector. Second, a massive expansion of the Social Security net. This is a crucial point for your exam. The new Social Security Code explicitly brings gig and platform workers, think food delivery and cab aggregator employees, under the umbrella of Social Security, with provisions for contributions from the aggregators. It also introduces the portability of benefits, meaning a construction worker can carry their Social Security benefits with them from one state to another. Third, improving the ease of doing business. The Industrial Relations Code, for instance, raises the threshold for companies needing government permission for layoffs and closure from 100 to 300 workers, reducing the compliance burden, especially for MSMEs. So, how will this be tested? For prelims, expect direct questions on provisions, like which code deals with gig workers. For mains, be ready for analytical questions on how these reforms will impact the formalization of the economy and the Make in India initiative. 3. The money story, fiscal. Let's start with the RBI. Many expected a tight grip on interest rates, but in a clear pivot to support growth, the RBI delivered several rate cuts through 2025. By the end of the year, the benchmark repo rate was brought down by a cumulative 125 basis points, landing at 5.25%. Why? Benign domestic inflation gave the RBI room to act. These rate cuts were a deliberate move to make loans cheaper, aiming to boost consumption and business investment, and in turn, GDP growth. For your exams, remember the final repo rate and that the RBI's stance was termed neutral for flexibility. Now for fiscal policy, and this is a major update, a GST 2.0 inches has arrived. Forget the old multi-slab structure. As of September 22, 2025, the GST system was rationalized to mainly two slabs, 5% and 18%. The 12% and 28% slabs have been largely done away with, though a higher rate of 40% applies to a few, sin, and luxury goods. This reform was aimed at simplifying compliance and boosting consumption. On the income tax front, the story is about boosting middle-class spending. The Union Budget for 2025-26 continued to push the new tax regime. While there was talk of a potential 12 lakh rupees tax-free income during budget discussions, the enacted policy effective for your exams is the one providing an effective tax rebate on incomes up to 7 lakh rupees. This move was credited with increasing disposable income and supporting private consumption, which helped keep the economy on track to be the world's fastest-growing major economy, with growth forecasts hovering around 6.6% to 7.8% in the first quarter. The high score, synthesis and a final tip. So far, we've discussed trade, labor, and policy separately. The final step for a top score is connecting them. Think about it, the new FTAs make our exports more competitive. The labor codes aim to make our manufacturing sector more efficient. And the supportive monetary and fiscal policies provide the cheap capital and domestic demand needed for industries to grow. Together, they form a cohesive strategy to boost domestic manufacturing, create jobs, and enhance India's position in the global supply chain. That's the big picture your examiner wants to see. And here's a final heads up, especially for UPSC mains aspirants. There's growing discussion among economists and in ministries about a new series for both GDP and the Consumer Price Index, CPI, with updated base years. Potentially in early 2026. This isn't confirmed, but it matters because a new series would better capture the modern Indian economy, including the digital boom. A statistical revision of this scale would significantly impact how we measure growth and inflation, making it a prime topic for a future analytical question. Let's test this with a quick MCQ. Which of the following is a key provision under the new Social Security Code? A. It mandates a universal basic income for all citizens. B. It extends provident fund and insurance benefits to gig and platform workers. C. It abolishes the Employees State Insurance Corporation, ESIC. D. It is only applicable to workers in the public sector. Comment the correct answer. This is exactly how these concepts get tested. Alright, let's do a rapid-fire recap. 1. Global trade pressures in 2025 were countered by a strategic push for FTAs with key partners like the UK and EFTA. 2. Domestically, implementing the 4 labor codes is a huge step towards formalizing the economy and expanding social security. 3. A supportive RBI with key rate cuts and targeted fiscal policies, like the new GST structure, work together to keep the domestic growth engine humming. Mastering these interconnected themes is your key to unlocking those extra marks that can make all the difference. Don't just memorize the facts, understand the why behind them. If this breakdown of 2025's economy brought you some clarity, a thumbs up on the video is always appreciated. It helps it reach more aspirants like you. Make sure you're subscribed with the bell icon on so you don't miss our next deep dive.